Welcome to another market breadth update. This week we're going to be looking through the key market breadth indicators and some of the major indexes and commodities charts. It's been a crazy week in the markets. We highlighted a few weeks back that there was potential for a short-term top. As you can see, looks like we've got a medium-term top as the markets had one of the biggest moves in history in terms of the quickest move, 10% decline in all time, I believe. As you see from the top up here, we've got the S&P 500 chart on the top. We had a rapid gap down at the start of the week, and we've knifed through key support levels, 30-week moving average, which has turned flat, and we closed below the 200-day moving average as well. Heavy volume. Nasdaq had a similar move, to over 10%. But it managed to close the week above a rising 30-week moving average and still above its key support levels. So compared to the other charts, it had it's still in a stronger position and is probably the only chart that remains in stage 2. There isn't many. Quite a shed load of charts this week moved from stage 2 to stage 4. So as you can see, which as the index charts played out here. The Dow Industrials knifed through its 30-week moving average, which even turned lower and closed very far down near the lows of 2019 even. So now it's way below the 200-day moving average and 30-week moving average. So it's going to take a lot of work to get back above those again now. The small caps, which have been underperforming since 2018, it's stage 2 is completely wiped out now, and it's actually approaching potential stage 4 breakdown there. You could argue that most of these larger cap indexes have moved, and the small caps have moved into stage 4 now, as we would have broken. If you drew a trend line there, you would have broken down there. We didn't quite manage to close below the actual 2019 support, but yeah, a lot of technical damage done this week. Let's have a look at the actual performance. So as you can see, since the start of the year, this is performance of the S&P 500, Nasdaq 100, the NYSE, Nasdaq Composite, Dow Jones Industrials, and the S&P 600 small caps since the start of the year. So as you can see, the Nasdaq 100 and Nasdaq Composite had the biggest moves, and they were up 9% in the middle of February, and we've had a big swing this week with obviously moving down below, down to 5% and 6% respectively ish. So we've had a good 10 to 14% shift in most of the indexes. The S&P 500 hadn't got as far up as the Nasdaq 100, it had only made it at 4% there, and has now closed the week down. It's close to 9.5%. Let's look on the actual bar chart to see what we got to here. So 9.32% since the start of the year now on the S&P 500, and the small caps is down 13%. So we've got some heavy moves in a short period of time from all-time highs. Okay, next, let's go into the Treasuries charts. This is possibly one of the only area in the market that we noticed this week in the Treasuries and the bonds, where obviously got new highs. The stage 2 continuation that we highlighted last week and a few weeks back, a few weeks previous, has got some legs this week with some heavy volume. So obviously moving inversely to the markets. Like I said, this is probably the only area of the market that actually survived this week, because even safe havens such as gold, as you can see here, we did initially push to new highs, but closed the end of the week lower. This could be, and there was some heavy volume, but it's still above the stage 2 continuation breakout level and still above a rising 30-week moving average. So it remains in stage 2. This with gold, it can obviously be affected on liquidation selling when everything's being sold off and you get margin calls. Gold can be one of the areas where people use to pay off calls in other stocks that they're losing on. So it could be due to that, but obviously we've got no idea why it's selling. Everything's selling just because obviously the panic selling in the markets or the algorithms or whatever doesn't really matter. The price action is all that matters. So we'll see how that goes for gold, but currently remains in stage 2, back at the breakout level. With crude oil, we had a stage 4 breakdown. Again, it had already been acting weak for the last few weeks and hadn't the bounce was low and hadn't managed to get back above the 30-week moving average, which was declining. So I did highlight a few weeks back that this could potentially break down to stage 4. So we got the stage 4 breakdown last week. Copper it didn't have much of a move this week. It did move lower, but in relative performance terms, you can see the relative strength compared to the actual market moves. It actually had a relative strength rise, and it remains near the lows of its stage 1 range. So there's still potential for a stage 4 breakdown below this level here. It's still below a declining 30-week moving average, but at the moment it remains near the lows of its stage 1 range. Next up, we got the NYSE Bullish Percent Index and the Nasdaq Composite Bullish Percent Index and the moving average breadth charts below. These had some huge moves this week, with the NYSE dropping 52% and the Nasdaq dropping 40%. So this obviously unheard of moves, really. You don't generally get big moves like that. The 2018 drop there, you can see, was about a 20% move, but obviously a 50% move in a single week is pretty dramatic by anyone's means. So we've moved from near the highs to obviously near the lower range immediately. We're starting to, as you can see, we don't get down to the lower range very often in the NYSE Bullish Percent, and it is known as the buy zone. So we will be looking for when we move out of that zone for a potential buy point. But in the meantime, it could take a few weeks or even a few months down in these lower levels. We'll see how that goes. Below, we've got the percentage of stocks above their 200-day moving average, 150-day moving average, and 50-day moving average at the bottom. Again, we've hit some extremes with the 50-day, the short term, down at 8.72%. Stocks above their 50-day moving average. These are levels we do not see very often. I've actually got a 20-year chart of this here. So as you can see on the 20-year chart, we do get down to these levels, but it generally is a swing low, like every time. So there's a probability in the next week that we could get a short-term low put in, because every other time we've got down to these kind of extremes, it tends to turn around very quickly. But that does not mean it's the ultimate low. Generally, when we get the 200-day and the 150-day moving into these areas, it can take many months to actually play out, and so the initial short-term bounce often fades, and then we will end up putting in new lows or retesting the low, but this normally takes 2 or 3 months to play out. So although we could get a short-term bounce here, as looks fairly evident from history, it does not mean that we've put in the ultimate low. We could go significantly lower from here still, although we could just retest the other this current low that we're about to put in the next week or so and see where we go from there. But in the meantime, yeah, it looks like there's potential for a short-term low. So if we go back to the short-term charts, I highlighted a few weeks ago the divergence occurring in these indicators. We were on bear alert on the medium and long-term charts here, and the short-term was already on bear confirmed, but the medium and long-term have now obviously moved to bear confirmed signals, but they've both moved into the lower zones, as I said. As you can see, the last time this happened in October time in 2018, we did get some bounce, and the market got stronger for a little while, but then we did obviously move further down in the December period to new lows again before we eventually got the buy signals as these moved out back above the 30% level and breakout levels. So the buy signals were when we broke above these highs here back out in January time in 2019, and as we know, we had a very strong run from that point, and the bullish percent of this index came out around the same time. So next we've got the advanced decline line charts. The cumulative line has broken below its 50-day moving average for the first time since, what's that, May-June time here. and it's the 50 days moving out. We're quite far below, so that doesn't show an awful lot at the moment, just that we've moved to a negative, which is fairly obvious from the price action this week. The short-term 10-day moving average momentum index, on the other hand, shows us something different, which is that we've moved beyond our normal range. So on a normal pullback, we normally bottom out around this 400 level, but on a more extreme pullbacks, obviously this 1000 level down here, and if I had a longer term chart to show you, which I didn't set up, I should have done, you'd see that we tend to bottom out around these kind of areas. So there's potential for again short-term low in terms of momentum. The momentum index, which is the 200-day moving average to the advanced decline line, has broken down below 2 recent swing lows, and so this is actually given a sell signal here on the momentum index, although it's still far above its zero line. But when it's a long way above the zero line, we look for a higher trend line to obviously give us a breakdown level. So this has given a sell signal here. The 10 and 30-day EMAs has had a crossover this week, which, as you know, was pretty obvious from the price action that would happen. But this again is a signal. So this is now on a bearish signal, and obviously we won't be getting long until that moves back to a bullish signal again. The McClellan summation index and oscillator showing similar to the momentum index over here, with an extreme reading on the short term and a sell signal continuing on the summation index. Let's move on to the new high, new lows. So I've included a 20-year new high, new lows chart on the left here to show where we are. So obviously, because we've come from the top, the amount of new lows is nowhere near as extreme as you'd see at other points when you actually get bear market stage 4, like longer stage 4 declines. And obviously you're getting regular amounts of new lows, so obviously this is much higher than you've seen in the past in these 20-year charts. But in the short term, obviously, as you can see from the bottom here, the new lows spikes identified by these red symbols here compared to the grey, which is the new highs, obviously has had some extreme readings this week. But the cumulative line, which gave a buy signal in February time in 2019, still remains above a strongly rising 50-day moving average. We've had a strong pullback here, but we're still above the 50-day moving average, so that remains on a buy signal itself, although obviously you're getting sell signals elsewhere. Let's move on to the percentage of stocks above their 150-day moving average. Extreme readings across the board this week. We've had some huge drops, like utilities dropped 50%, financials dropped 46%. Like basically every sector didn't get out alive. Basically, there was any kind of stock got hit. So basically, the sectors as a whole was dropped down to 24.03%. So if we look at the visual chart of this. Yeah, if we look at the visuals, then we've got, obviously the sectors have dropped from up. They were up here in the 60s and 50 range. We were in neutral plus and bull last week, and we've now dropped into the lower bearish ranges below 40%, with multiple sectors, 4 sectors now in the lower oversold zone. So what we look for in this is when the sectors start to move back out again above, then they spend a bit of time below the 30% level, and then like a few weeks or a few months below this level, and then they start to move back out again above the 30% level and start to give buy signals. I think that's the lot for the week. So thanks for watching. Remember to subscribe and hit the like button, and I'll see you on the next one.